Hello, good morning to all. Welcome and happy Friday. Welcome to today's daily dose of market insights by OANDA, presented by myself, Kelvin Wong, the senior market analyst of OANDA Asia Pacific. So first and foremost, happy Friday. Today it's the Friday, finally coming close to the end of the week, 8th of September. So before we start our usual daily dose of market insights, let's take a look at the disclaimer slides first. All right, so leverage trading is considered risky. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. All right, so now, as usual, the agenda for the key, we call it takeaways for our daily dose of market insights will be the highlight of key events and data events. It could be corporate events and economic data that released yesterday, and also what are the current economic data to look out for today, as well as certain data that may have released earlier before the start of our daily dose of market insight at 11 a.m. Singapore time. That means earlier around 8 a.m. to perhaps 9 a.m. And to round up, we have this short-term technical outlook for various key asset classes that I'd like to share with you all. Okay, so now let's start what happened last night in the US stock market. So for those who have been following us since 2 weeks ago, we have been kind of cautious on the US stock market. Why? Because there are just signs of technical weakness in the short-term chart, which I already highlighted on the Nasdaq 100 and the Wall Street, which is Dow Jones, in a couple of weeks ago, for those who have followed our daily dose of market insights. So yesterday, this short-term technical weakness further kind of reinforced or reverberated. Why? Because there's actually a couple of negative news flows coming out from US. So what is the negative news flow over here is more or less related to the US and China potential ongoing trade war within the high-tech arena space. So let us share with you what happened last night. Over here, there's this news flow. So let me turn off my camera so you could focus more on the screen. Over here, so what we could see over here is that as you all know, last week there was a kind of milestone with Huawei managing to actually come out with a new much more advanced model smartphone using localized Chinese produced semiconductor chip from SMIC. So SMIC is actually a key Chinese semiconductor where it comes under the sanction list of US. That means, i.e., they are not, put in a nutshell, they are not able to get higher grade semiconductor chip to manufacture smartphone products, but they're able to do it. So they actually, what US certain lawmakers caught their radar right now is that Huawei or SMIC, one of them, they might either circumvent or go around this sanction list, or sanction, we call it being sanction list, to actually get hold of certain technology know-how, or they call it violated the sanction. So what you could see over here is that, and do not forget, after this, we call it statement by US, we call it lawmakers, China had now started to actually tinkering of banning Apple iPhones for the usage of government bodies. That means government officials may not be able to use iPhones, and right now they may actually we call it spray it down to the rest of government related corporations. That means not really government agencies, but agencies that are related to government, the government, the Communist Party, in a way, the Communist Party in China. So that could be what I call a risk, or where Apple may start to actually see if this law is being pushed through, or this tick or that, we call it rhetoric measure is being pushed through, China banning what we call it Apple phone, significant Apple phone usage in China, starting from government-related entities or officials. We could start to see Apple sales being hampered in China. And do not forget, China is one of the primary key revenue, we call it market for Apple. So with that, we start to see what I call further onslaught of the US tech stocks that took switch yesterday, where Apple is down negative 2.9%. All right, from here, and also NVIDIA also down negative 1.7%. But what we could see over here is that the rest of the market actually held relatively quite well, other than the mega cap tech stocks, which is Apple and NVIDIA, facing the brunt of the sell-off yesterday. And what's interesting over here is that during the intraday, the Nasdaq 100 was the worst performer. They actually down negative 1.15%, but when come close towards the end of the session, they actually trim a bit of losses to close negative 0.7%. So the top performer was actually the Dow Jones Industrial Average, which is positive 0.17%. And for those who actually we call it listen to yesterday daily dose of market insight, I do highlight that over here is that the Dow Jones Industrial Average, which is our platform called the US Wall Street 30, there will be a risk of a minor we call it counter trend bounce, and that bounce actually took shape right towards the resistance at 34,500, which I highlighted, and 34,550. So later I'll highlight what are the key levels to watch out for again in short term for the US Wall Street 30 index, which is the Dow Jones Industrial Average. All right. Over the FX space over here, so this morning there was actually another round of we call it verbal intervention. From this time round is the not the vice finance minister, is the finance minister himself, actually saying that on Friday, that means early this morning, Asia session at around 8 a.m. 8 or 8:30 a.m. or so Singapore time, that rapid currency move were undesirable and authorities won't rule out any option against excessive move. And still recall that yesterday we have neutrality stance between 47.90 and 147.20 on the dollar yen. So dollar yen actually puked down 147.20 this morning, but where it goes after that, so likely after the breakdown on this neutrality zone, the lower limit of the neutrality zone at 147.20, perhaps dollar yen is now coming very close to a key short-term support level that we should be paying attention to. So that will be much more showcased or highlighted in our short-term technical outlook towards the end of this session. All right. So now another key we call it event that took shape this morning will be the release of the finalized Japan GDP figure. So Japan GDP Q2 figure finalized, it came in at 4.8%, slightly lower than previous estimate of 5.1%, 5.5%. So it was kind of revised downwards. Also, what we could see over here is that bank lending, but interestingly, bank lending in Japan actually rose 3.1% August. All right, year on year in August, above previous month of 2.9% in July, and above expectation of 2.8% year on year. So all in all, what we could see over here is that the Japanese corporation are now starts to, or individuals or corporation has starts to be more optimistic about the health of the Japanese economy, and they start to actually pick up we call it borrowings from bank, which is actually a good sign in terms of from the long term and medium term perspective for Japanese risk assets like Japanese equities. Why? Because the deflationary risk or the deflationary mindset that corporation and individuals have in the past 5 to 10 years has slowly dissipated, and they're much more confident in the Japanese economic growth. So that actually explained to a pickup in bank lending. So if you look at the trend of bank lending over here, we could see a healthy pickup since the start of this year. So if you put at a 5-year trend, okay, it's actually picking up nicely. Also post-COVID recovery as well. All right. So now going on next will be what are the key things to look out for today's we call it session during the Europe session. Okay, over here we have the this is a bit lagging, perhaps may have a bit of impact, but not so much, because this is the third estimate of Eurozone GDP Q2 growth. Okay, so Eurozone right now is currently in the state of stagflation. That means elevated inflation, but economic growth start to slow down due to the fact of its trade ties with China as well and the rest of the world. Primarily on China, pardon me. So we start to see lackluster growth in China, which has to impact Eurozone export towards China. So what's the final rate that coming is at 1.3%, almost the same as concession is expecting at 1.5%. All right. Then after that, pardon me. So today, okay, that was yesterday. It really is. Sorry, my apologies. Okay. So for today over here, just now I screw up. For today is the final number of German inflation rate. Okay, inflation rate. So just ignore what I said earlier. Okay, it was my mistake. So to look out for is Germany final inflation rate year on year for August, released at 2 p.m. Singapore time. Previously it came in at 6.2%. So if you look at the trend of the inflation rate in Germany, okay, it's kind of lackluster in the last 3 months or 4 months or so since May. So in market kind of let's see whether it's managed to actually hover around this area. So if we start to show a bit of lackluster inflation numbers, potentially what we could see over here is that there will be what I call a continuous debate between the Eurozone officials to whether to actually starts to actually be similar to the Fed. That means they may start thinking of keeping Eurozone coming very close to a terminal interest rate level. That means more or less we may just see one more hike in Eurozone before it starts to actually thinking of when next to actually cut interest rate next. Okay, very similar to the Fed approach right now in Eurozone because inflation starts to temper off. But bear in mind this lagging in data, and the Fed the Eurozone officials, or in fact the rest of the world central bank officials, will also keeping a close eye watch on oil prices. So as you all know, I highlight earlier, oil prices has did a bullish breakout at the start of this week above this 83, 84 level, depending on which you look at it, which benchmark you look at it, WTI or Brent crude, and the next major resistance will be at the 93/95 level mark. If that were to actually take shape, potentially we may see this lagging inflationary data starts to pick up again in the fourth quarter of this year. So I believe that the key central bank officials or major central bank officials are also keeping a very close eye watch on energy prices, and because they do not want to actually see what we call a double dip up move in inflation where they start to actually be too dovish, and that may actually open the floodgates for more speculative movement that push up in the end, at the end of the day, it may start to push up inflationary pressure much higher next year. Okay, so I think their hands are pretty much tied right now. Okay, so what's next to watch out for throughout the US session later on? After that, you have Canada jobs data at 8:30 p.m. Singapore time, and thereafter there will be no key US data release. So on Saturday, very interestingly, China released their inflation rate data as well as PPI data, which is the producer price data. So something to keep an eye out, watch out for. Will we start to see a slowdown of deflationary pressure in China, or will this deflationary pressure starts to maintain their momentum? So something to keep a close eye watch on in this coming Saturday, all right, where China released its inflationary data for August. So bear in mind, today I want to highlight for you that in the first half of session, Hong Kong Stock Exchange closed for today due to this typhoon risk alert. So there's no trading right now on the Hong Kong equities, which we may start to see our platform, the Hang Seng 33, is not actually quoting right now due to the closure of the Hong Kong Stock Exchange today in the morning session. So whether we open later, we should see later about close about an hour time, whether the authorities wants to relieve this typhoon risk alert, all right, to enable the afternoon session to kickstart on the Hong Kong Stock Exchange. So until now, it's still unknown. Yeah, we got to actually wait for the authorities, okay, from the Hong Kong Stock Exchange to determine whether they want to actually reduce the risk level of the typhoon alert. Okay, so with that, now let's take a look at the technical chart. So let's start with FX first. So FX, right? Bear in mind because of this very interesting move on the dollar yen. Okay, let me highlight to your dollar yen over here. Oops. All right. So this is the dollar yen. So dollar yen over here, still recall that yesterday we have a neutrality level between 147.90 and 147.20. So this morning it actually peeled down. Okay, after it peeled down over here, it came very close to the 20-day moving average which is a key short-term support at 146.30, and thereafter it did a kind of a reversal right now and almost erase off all the earlier losses that was seen this morning due to that what I call it, that verbal intervention from Japan Japan finance minister, pardon me, a bit of tongue twister, it's Friday. So given this sharp upside reversal that we see on the hourly chart on the dollar yen. This is the hourly chart, and the RSI also starts to tick upwards and now breaching above the 50 level mark above, so indicating to us that some signs of bullish momentum coming back into play after that puke below that 147.20 lower neutrality level that we have yesterday. So we're actually flipping to a bullish bias right now in short term, given the fact that short-term technical elements now has started to show potentially signs of positive. So 14630 will be our key short-term pivotal support we have for today. Resistance coming in at 147.90, a break above potentially could take us higher towards 148.40 on the dollar yen slash 148.85. So what is 148.40, 148.85? These are pretty much key level that is being defined, higher key resistance level that's being defined on the hourly chart. Okay, on the daily chart, on the daily chart, which is this swing high area of 31st of August last year and 3rd of November last year. This and also close to the top of this medium-term ascending channel that is in place since 24th of March this year. All right, so when you come close to this level 148.40/85, perhaps we got to be a bit more cautious because technically there's a key resistance level, and there potentially could be much more verbal intervention coming into play from Japan. All right, so but in short term, we are now flipping to a bullish bias given the fact that short-term technical elements has turned positive. But definitely if you break below 14630, then this short-term bullish bias will be invalidated to see the start of this potential minor corrective down move to retest the swing low of 23rd of August and 1st of September, acting as a support at 14460, which is a kind of a intermediate minor range support level. All right, now moving on to this Aussie dollar. So Aussie dollar, still remember that we have that bearish bias holding below 64 figure level. RSI now still showing exhibiting sign of short-term bearish momentum. Why? Because if you look at the current RSI managed to actually inch down lower from this parallel support that I draw since the high of 1st of September, also shaping this kind of descending trend line resistance as well. Okay, so all in all, right, still using 64 figure as the key short-term pivotal support, pivotal resistance level to maintain that short-term bearish bias towards 63.10 on the Aussie dollar. So if we start to see a breakup, an hourly call over 64 figure level, potentially we could see a push up to test that 20-day MA, also acting as a resistance at 64.50, which confluence with the former swing low of 30th of August and 1st of September, now turns into a pullback resistance as well. So still maintaining that short-term bearish bias on the Aussie dollar, as long as 64 figure key short-term pivotal resistance is not surpassed to the upside. Okay, now what's interesting over here will be the sterling dollar. So if you look at the sterling dollar yesterday, we did highlight one level to look out for is the key short-term pivotal support at 21.2445, looking for a potential short-term counter trend rebound, which actually it took place nicely, smack down and retest this rebound now to shape higher low. And where does it occur? It occurs right at the 200-day moving average. And what we see now is that the hourly RSI has started to actually inch up above the 50 level, reinforcing that short-term bullish momentum coming back into play on the sterling dollar. But bear in mind over here is that we do not see a change in the medium-term downtrend on the sterling dollar yet. Right now, what we could see right now is more like a minor counter trend rebound within a short-term and medium-term downtrend phase that is still intact on the sterling dollar. So no change for sure. 124.45 key short-term pivotal support level to watch, looking for this counter trend minor rebound potentially to test the intermediate resistance at 125.50, which was the previous we call it swing low of 25th of August and 5th of September, now turns into a pullback resistance. Above it potentially take us up towards 126.40, which is this also this swing high area of 4th of September that confluence with this medium-term descending channel that is in place since 14th of July. So all in all, right, what we could see here is that the sterling dollar is still trending within a medium-term downtrend. So what we could see now is just perhaps a minor or a short-term counter trend rebound within this medium-term downtrend. All right, so 124.45 key short-term pivotal support level to maintain this potential minor short-term counter trend rebound scenario. But however, if we start to see a breakdown below 124.45, then this bearish impulsive down move should continue towards the next support level at 123.40 on the sterling dollar. All right, so with that, let's go to the stock indices right now. So for the stock indices over here is that, let us start with the, okay, so Hong Kong is closed today. So Hong Kong is closed today for sure. So once if Hong Kong managed to open, still recall that yesterday we have this bearish bias below 18,540. So break below 18,140 now is coming very close to the 17,790 mark. So given the fact that the closure of Hong Kong for today, and if Hong Kong will open later, there's also a kind of coming very close to the support level already, and RSI is oversold. So I would rather turn neutral right now for the Hong Kong 33 index if the market starts to open later in the afternoon. All right, neutral between 17,790. All right, right now, and also this level here. Okay, 18,300 level. So neutral between 18,300 and 17,790 level. Okay, so what's 18,300? This was the yesterday trigger point of that breakdown, where previously was support. After that break, you start to see that swift minor down move. Okay, so neutral between 18,300 and 17,000 790 for today on the Hong Kong 33 index. So now what's next will be the German 30. So still recall that the German 30 yesterday we have a bearish bias below 15,850, but what has changed now is the hourly RSI has now shaped a bullish divergence. Price action showing lower low, but RSI showing higher low after hitting the oversold level, so indicating to us that the short-term downside momentum has started to ease off on the German 30 index. So that actually reduced or that bearish bias that we have initially yesterday. So I will prefer to turn neutral for today between 15,850 and 15,670. So more of a sideways trading for German 30 for today. All right, now the US stock indices, let's start with the Dow Jones Industrial Average first. US Wall Street 30, we call it our platform. Still recall that yesterday we're looking for that minor rebound. So that minor rebound actually takes shape right at the 34,500 level, hitting at 34,575. So what you could see over here is that we will still use that 34,710 as a key short-term pivotal resistance level to maintain that short-term bearish bias for today. So also conversing with the minor descending trend line that I draw from 31st of August, and also the 20-day moving average. So looking for, as long as 34,710 is not surplus to the upside for today, potentially the Wall Street 30 may see a retest on this Wednesday low, swing low area at this 34,310 level. A break below 34,310 level exposes the next support at 34,100. But however, if we start to see a breakup above 34,710, this we call it short-term bearish bias will be invalidated to see a retest to last Thursday swing high at 34,050 level. All right, so still maintaining that short-term bearish bias on the US Wall Street 30, given the fact that we're now approaching very close to the counter trend, the minor counter trend rebound level that we highlighted yesterday, with the key short-term pivotal resistance at 34,710. All right, now Nasdaq 100. Okay, so this Nasdaq 100, yesterday it plunged during the open, come very close to the short-term resistance that we have, 15,085. Also bounce off from the 20-day moving average. So what we could see right now is that the Nasdaq 100 potentially could see a bit of bounce up more towards the intermediate resistance level at 15,350 level, which is this former swing low now turns into a pullback support. And if you draw the Fibo retracement over here, it's also close to the 38% Fibo 50% Fibo retracement, with the 61% Fibo retracement slightly above our short-term pivotal, slightly below our short-term graphical pivotal resistance that we have for today at 15,530, which is this very clear former minus range support that is in place since 31st of August, broken down on this Wednesday. So now acting as a resistance level, which is slightly below the 61.8%. Okay, so using 15,430 as a key short-term pivotal resistance for today, we do expect a bit of bounce towards this level first, 15,350. As long as 15,430 is not surplus to the upside, potentially the Nasdaq 100 may see a test down towards the support level at 15,085. So still maintaining that bearish bias on the Nasdaq 100. But however, we start to see a clearance above 15,430, then this bearish bias will be invalidated to see a squeeze up to test the next resistance at 15,630. All right, so that's for the Nasdaq 100. Now, commodities, still recall that for gold, yesterday we are actually having that short-term bullish bias. Why? Because it actually tests that 200-day moving average. So very nicely, it shaped a bounce off the 200-day moving average. And right now, it's coming very close to that resistance level that we highlighted yesterday, 1928/1900/32 level. So still no change here, using 1912 as the short-term pivotal support level. A break above 1932 today potentially could see the extension of this recovery towards this next resistance level over here at 1938 level. All right, so still maintaining that short-term bullish bias on gold. All right, as long as 1912 key short-term pivotal support level holds. If a break below it, this we call it short-term bullish bias will be invalidated. We will start to see a continuation of this we call it this short-term downtrend that is in place since 1st of September to test the next support level at 1903, which is also a psychological level close to the 1900 level. Okay, now lastly, I want to highlight for you all is the WTI crude. Still recall that WTI crude over here is that potentially we may start to see a short-term minor pullback. This WTI crude has failed to actually break above Tuesday and Thursday high that was close to the 88 figure level, okay, 88.30 level. And if you look at your RSI continue to shape lower high and being kept by this parallel descending trend line resistance on the hourly. So using 89.10 just to prevent any whipsaw above the 87.25 level, 89.10 as a key short-term pivotal support. Potentially, we may see a minor pullback towards the 84.90 level. So this was the breakout level that broke out on last Friday. And also, if you do the Fibo retracement from the low of 23rd of August all the way up to this Thursday high, is very close to the 38.2% Fibo retracement. All right, but however, if we start to see a bullish breakout above 89.10, then we'll see the continuation of this very steep impulsive up move to test the next resistance at 91.20/60 level. Okay, so with that, we come to the 30-minute mark. Okay, my apologies to actually extend for today because there's much more interesting insights I'd like to share with you all due to the fact that there are some new technical elements that start to emerge on the various chart that I shared with you all earlier about 10 minutes ago. So with that, have a great weekend ahead, and we shall speak again on Monday. Thank you.